Are you somebody who's looking to buy their first investment property, but you really don't know where to begin? What if there was information and strategies that you could be implementing immediately in order to make that dream of being a real estate investor a reality sooner than you actually may think? Well, in today's video lesson here, what I want to do is review some of the do's and don'ts for first-time real estate investors, as well as some unconventional ideas about where you can get the funds needed to put down on your next property investment. Check it out.
Why is real estate such an attractive investment versus other alternatives like stocks, bonds, or index funds, or things like that?
So I think the number one answer is very unique to real estate: rental income. Stocks, you get dividends, but when you really look at on a percentage basis, like rental income coming in monthly versus a stock dividend, you're going to get way more bang for your buck on the rental income. The second thing is that real estate is hedged for inflation. When you look over many, many decades, when inflation goes up, rents go up, the prices of homes go up. Like, all these things are interconnected. The next thing's appreciation. Appreciation is what you buy it at today versus what it's worth in the future. So if you buy a house for $200,000 and a year from now it's worth $250,000, then on paper you have a $50,000 appreciation. Now, in some markets, real estate can go down just like other things, but historically speaking, it's pretty stable, over many decades, which is very, very different than the stock market, where you could see huge drops in one day. Like, you're not going to see that in a day or a week in real estate. It's more looking over many years. So I have to also mention the tax advantages of real estate, because there's so many. You don't have any tax advantages for stocks.
Tell me about some of the biggest. There's got to be hurdles here.
And the biggest hurdle by far is going to be finding the money to put down. That's always the biggest thing. Let's talk about solutions to that right up front. So number one is, if you already own a home you've lived in for a little bit, cash out refinancing. Look at it. You might be able to get more equity out of your home right now to put down on the next one than you ever thought. Retirement or 401k loans. One I don't really recommend that often, especially to new investors, but if I didn't talk about it, I wouldn't be doing my job here today educating everyone, is the home equity line of credit. So for the right person, that home equity line of credit can be a good idea. Just be careful, because those are adjustable rates, so they can fluctuate. And the last one I'll give you is a secured line of credit. It's going to entail getting a line of credit against an investment portfolio.
Talk about some investment mortgages and the different requirements that are needed.
So first of all, one of the great things about it is that you can get credit for the potential rental income that you're going to receive. So even if you haven't gotten rental income from the property before, because you haven't owned it, we'll get a schedule on the appraisal report that'll show what the market rent is and what the property's rented for now. And the underwriters can use up to 75% of that rental income towards your qualification. The next thing that you want to be aware of is the down payments. We talked earlier about the fact that investment properties can be much bigger down payments. How much bigger? Well, we're talking about 20 to 25% down. That's what you really want to be comfortable with when you're getting an investment property mortgage. The other thing is higher credit. Conventional financing typically is going to start at a 620 credit score, but at a 620 low down, you're not going to be getting a very good interest rate. You're going to have to pay a lot of extra points and fees. On investment mortgage, you want to have that credit as high as possible. Ideally above 700, in a perfect world, 740. The last thing I want to mention that a lot of people are not prepared for is that these are higher risk mortgages, right? Because you're not living there as the actual owner of the home. An investment property mortgage, because it's higher risk, like we're talking about, it's going to have higher interest rates than a owner-occupied loan. And the last thing is the fees. There are going to be, where I usually don't recommend paying points and fees on an owner-occupied refinance or home purchase, especially right now on a investment property. In most cases, you have to pay points and fees. There's no way to get a loan without those points and fees.
Can you go more in depth, though, on maybe some special considerations that are given to real estate investors when getting a mortgage?
Yeah, so reserves are key. We were talking about the fact that what if your tenant doesn't pay you? How are you going to pay the mortgage? Most of the programs are going to require that you have some reserves, ideally at least 6 months of reserves.
What about non-qualified DSCR mortgages and hard money loans?
Right.
Where do those play a role?
Non-qualified or non-QM, DSCR, which stands for debt service coverage ratio. That's what DSCR means. Those are loans where they will qualify just based off the income in the property without looking at your tax returns or anything like that.
Why is right now, Rob, why is this a time to be looking at becoming a real estate investor.
We've actually seen inflation and we've seen rents going up. And now you can increase your rent from $2,000 to $2,300 because of the market and inflation. Your mortgage, though, didn't go up. Your mortgage was locked in. Your mortgage was a fixed rate. So your mortgage stayed the same, yet you're able to increase rent. The other thing is the return on investment right now. Even though property prices are high, you just need the right real estate advisor, the right team to guide you and find that good return on investment. And then the last thing is that the rates are still historically low.
It's my goal that by watching today's lesson, you now have hope and motivation to get out there and get that first rental property under contract. If you know someone else that may find value in this, go ahead and share the video with them. Also, like and comment on the video so we know that you're enjoying our content. If it's your first time watching us here, please go ahead and hit that subscribe button, also the bell so you get notified on all of our future content. And I do offer consultation, so if I can be of assistance to you or anyone that you know, reach out to my office by call, text, or private message. It's 860-413-3938. Again, I hope this helps, and we'll talk to you soon. Take care.